Good afternoon, everybody. My name is Phil Thompson. For those who don't know me, I'm the Regional Director for Deepbridge Capital for Central Region. Thank you for joining us for this Deepbridge EIS portfolio overview. I hope you've all had a good holiday, good summer. Hopefully there's going to be lots of tax efficient planning that we can talk to you about. So the purpose of this event is to provide you with an insight and updates from our EIS portfolios. And today we're going to be talking about the tech growth portfolio, which is our more mature one. And we're going to be doing life sciences next month in the third Wednesday of each month. So we do welcome questions, so please use the Q&A functionality below, and I'll attempt to get through those if there are any as we go. We are going to be strict on time. It's 30 minutes. And as you know, as before we start, I need to remind everybody that we are talking about EIS investments today, which by their nature are early stage liquid companies. So as long as we consider that and they're high risk, we shouldn't go too far wrong. Well, today I'm delighted to be joined by David Blake. He's our Investment Director for the Deepbridge Technology Growth EIS. So, David, thank you for joining us today. And just before we start, could you just give us a little bit of background as to what you do and where you come from?
Yeah, thanks, Phil. I've been with Deepbridge just over 2 years now. Been kind of fully involved in the technology growth portfolio during that period. Prior to that, and I'd spent 4 years at another VC fund. And I guess my background at a really high level, I'm a qualified accountant, kind of came through a number of blue chips in defense, medical device, culminating in power generation, where I was managing a $500 million debt facility as the treasury manager. Made a bit of an unusual decision at that stage where I I left accounting to go and study a master's in software engineering, which was focused on blockchain technologies. I could kind of understand how that technology was going to change the way that supply chains were working in the environments that I'd been involved with. During that period, I worked with an early stage ad tech company that we grew from zero to $5 million of revenue in the first 12 months. Uh, Built my own app that I took to VCs to try to get funding for. It was a peer-to-peer contactless payment system at the time. This was about 8 years ago, so prior to COVID. Lots of the VCs were kind of saying, "Oh, we don't get this. Why not just use the bank?" While I was on that journey, I came across a fund manager who said to me, "Oh, look, we think you've got some really relevant experience. Why don't you come and join the fund?" I made that decision. Ultimately, obviously, my fintech didn't pay off, and I'm not calling from a yacht today. But it does place me, I think, somewhat uniquely and reasonably well positioned for the role that I
Yeah,
find myself in today. So, the culmination of that history comes together quite nicely, I think.
yeah, bring a lot of experience to the table. So thank you for that. So
Okay.
let's get straight down to the tech portfolio. Have you got a couple of companies in particular or highlights over the last few months, over the summer, that you've been working on?
Yeah, sure. So I mean, our portfolio's got 45 companies currently active within it, and a number of those I've had some reasonably some very positive things that have happened over the last few months. So just kind of talking through a couple of those. So one of our early stage deep tech companies, Ajik, for example, which came in an SEIS cohort and then subsequently an EIS round. Um, they were able to deliver a quantum computer to the National Quantum Computing Center, which was the first to be delivered. They'd clocked in on the back of that income for the past year of about just under £4 million, which is a fantastic story for a very early stage company like that. Actuation Labs, again on a similar trajectory, joined in the SEIS cohorts, further EIS investment. we've actually, I think that's currently open at the moment as well, has just secured and started a very significant grant with the Aerospace Technical Institute, working to develop cryogenic valves for the use of hydrogen in aerospace, which I think is really, really quite exciting for them. Checkboard, another company which we brought into the portfolio shortly after I joined. At that stage, it was doing about £15,000 a month in revenue. They've consistently achieved over £400,000 a month in revenue over the last quarter.
And you
And
get,
it's,
you're going to take credit for that.
yeah, yeah, I mean, that was it was purely all me, not excellent founders, but I mean, that's testament to, I think, our investment thesis and being able to
Yeah.
to pick well. Greylist Trace, another company within the portfolio, have just secured a seven-figure contract with one of their customers, and Headbox have just acquired a company that's now their Australian subsidiary, which from their perspective will add about 25% revenue onto their top line now, as that company continues to expand. That's actually quite an exciting kind of growth story going on at Headbox as well. So yeah, there's some.
Interesting. And obviously, I think it's well documented that over the last 18 months, 2 years, it's been, challenging for companies with other factors that they can't control. Um, has that changed at all, or has it eased up a little bit?
Yeah, no, I'm definitely not going to take credit for the challenges of the company since I joined Deepbridge. I mean, look, the funding environment coming into 2022, the venture capital market was very buoyant. Since then, there has been a significant kind of change in that, and that has created, I guess, difficulties with fundraising that it's not just seen across our portfolio, but will be seen across
Yeah.
the entire market. And then on top of the funding situation, there's that kind of weathering the current uncertainty that's going on. That was happening quite a lot last year, I guess, with the change of governments and some of the potential impacts to small businesses as a result. And I guess we're still kind of seeing that knock through on a number of on a number of the portfolio companies where, for example, their sales cycles might be extending because their ultimate customers are feeling a little less confident about how their market is performing. So generally, in the software space and where there's always been reasonably long enterprise sales cycles, they've also continued to expand. We've also had the Donald Trump tariff piece, which is thrown everything up in the air this year. Although saying that, we are really fortunate to have Hurricane in the
Yeah.
portfolio because Hurricane happened to be the kind of go-to solution for solving that for lots of people. So they conversely are a company that have worn that period really, really well. And then, of course, the other thing is it's the new market of AI and how that's impacting companies. Both how they can utilize it internally within their own companies, but also having to keep up with the innovation of potential competitors as well. So that's definitely brought needed a wider lens to do, and a good example of how that because it's happened reasonably quickly, how that has changed the way some companies have to work and operate is traditionally you would have spent a lot of time developing a really strong SEO strategy. So, for example, people would go on their search engines and they'd be able to find the company. So you spend quite a lot of effort to be able to present really highly on that. But what's interesting is there's currently a really big shift from the amount of people who are searching in that way now and who are now using things like ChatGPT for their search. And now there's that kind of positioning of having to reposition your company for the AI models rather than just the Google bit. And as a result, we are seeing probably higher customer acquisition costs for those businesses that have got online go-to-market strategies. and not just higher costs, but also each click is costing more, but the conversion rate's gone down as well. So
Yeah.
kind of balancing that is something that is, very, it's forefront on a lot of the company's minds.
It's interesting. I mean, speaking to advisors over the last, well, since the budget last year, and certainly they're all asking about AI, and we've seen it come into our meetings as well, where everything's done quicker, and it's summarized and everything's done for you. So in theory, it does give you more time to spend with clients and do webinars like this. But it's interesting, isn't it? But talking about the lack of funding at is it all at the very early stage, or does it affect? How does it affect later stage companies as well, that maybe look at our companies and think, well, we'd like to, but
Yeah, so I think it's probably fair to say it's reasonably consistent across. Well,
right,
I would say it's probably a lot worse at the earlier stage, and then it's still tougher at the kind of more mature stage than it would have been, say, 2 or 3 years ago. But I mean, on a really high level, venture capital funding is still it's really strong on a kind of global scale. But I think what we're seeing is very large funding rounds going into a number of smaller, super scaling companies. And then the rest of the market is still a bit damper. And as a result, it very much feels like it's still it's almost a buyer's market at the moment, and generally new investors have become pickier about what they're looking for. So traditionally, we'd say moving from into the Series A round, you'd probably want 1 million of revenue to be at that sort of scale. That's pushing more like two at the moment. So you can definitely see that the next stage investors have got pickier, but it's not just that. It's the rounds are becoming because they're becoming larger. You need to have more syndication, so there's got to be two or three partners around the table to invest. And what's happening as well is we're also seeing what I describe as fruitier structures, where it might be a preference of a new investor to come in to go into a more advanced class of shares with greater priorities, and that's just the result of the tightening in the market, I think.
and does that also impact the sort of extending the exit uh, plan, if you like? Because I mean, looking at exits that have come through recently, they're very few and far between, but also there's ones that are coming through from 2012, 2013. It seems, I think the thing that to manage people's expectations, I think EIS and SEIS, I think it's got timescales have got lengthened, haven't they, because of all of the things, lack of funding, or you know the war, or cost of living. It's just a harder thing, isn't it? It's a harder market.
Well, I mean, I think it's definitely fair to say that over the last 2 years, the market for acquisition has kind of slowed down
Yeah.
quite a lot. But I am starting to see a kind of thawing of that at the moment, and a kind of movement. And one of the things we do know is that a lot of your trade buyers who would traditionally be buying in this kind of market have been kind of building their cash reserves. So it's almost like they've been waiting for the opportune time, and I think we're starting to see a lot more activity in 2025, certainly than we did in 2024.
And is there any particular, for example, is it the US that may be driving things forward in Europe and the UK?
I think we definitely see a lot of interest from America. But I think I mean, it's more the global movement of capital as well that we're seeing. A lot of interest from the Middle East
Yeah,
and Southeast Asia as well. So yeah.
excellent. Okay, so basically, what have all clients and all IFAs want to know? Well, out of the portfolio at the moment, what are we working on? Are there any IPOs or trade sales that are coming up? It's the usual question, Dave. So I'm going to ask it straight away.
Well, yeah. I mean, obviously appreciating that a lot of this information is commercially sensitive,
Yeah.
so I'm trying not to go into too much detail on these. But we've been working quite hard with a number of small mid cap banks this year in order to explore kind of IPO opportunities, and there's been quite a lot of really positive interest in a number of our more mature companies, and and I've actually found that interest to be I was going to say surprising, but it's interesting how the market has changed, and now that there is this kind of really, it seems to be there's a really strong pull for new IPOs to be happening. So it's definitely a softening market from from that perspective. We've also had, or we've actually currently got uh, a couple of companies where there's strategic acquirers who are in direct discussions with the companies at the moment. So we're going through a process of trying to structure those. As to how quick that will happen, who knows? But that's definitely again that kind of positive green shoots coming through, and actually because of the spread across the companies that they're interested in as well. Again, that suggests to me that the market is becoming more optimistic about acquisitions again, which is really positive. And without giving too much away, there is the possibility of potentially our first IPO in the US that could be on the cards coming up over the next few months as well. So fingers crossed on those.
in the US. So that's interesting. So again, I think for those that don't know, a bit of background about Deepbridge and our founder Ian Warwick. That's how he sort of started in the business, wasn't it? Doing
Mm.
turnarounds on the Nasdaq, and so he's got a very good network as in the US, hasn't he, as well as our
Yeah,
team
well,
in the
yeah, and
UK.
I mean, it's really helpful that he's got the ability just to pick up the phone with a number of these institutions, and we can have the conversations we need in order to do it. It's really really helpful.
It's exciting. That'd be good to communicate with the IFAs. So we'll wait and see. So another thing that I wanted to touch on was there's always a comment about, or not always, but a familiar comment about EIS. Oh, it's always London centric, and the Golden Triangle, Cambridge, Oxford, and London. How, from a deep bridge point of view, how do we sit? Because I think we're a little bit, again, we're a little bit different, aren't we, to a lot of our peers?
Yeah, I mean, I'm pretty sure the statistic is 90% or something of our deals are done outside of the London region. Um, but I think it's a really exciting area to be in because talent and ideas don't just exist in London.
Yeah,
So and the UK's quite fortunate because we've got such a wide remit across the UK. We can work with areas where there's different expertise. There's a number of technology clusters, for example, where we have the ability to invest in those companies around that cluster, which is where the knowledge and experience is, as opposed to necessarily just where the capital seems to be in general,
yeah,
which tends to be London. And there is kind of double-edged swords, but the valuations are better or tend to be lower in the regions rather than in London because of that weight of capital outside of it. But equally, um, because the valuations are lower, the round sizes tend to be a little bit lower. But equally, the costs of running the company tend to be a lot lower as well. So there's that kind of you know double edge to that piece. But there's um, a number of other organizations that we can work with as well who
yeah.
have got kind of regional focus. So it lends itself quite well for impact in the regions that we're working in. So yeah, it's
Are there any hotspots around the UK? Because we do, speaking to advisors, I mean, they do comment that they want to know there's more interest now about where the companies are based and what they're doing. And, they don't necessarily want to be funneling money into London. They want to do it in their own backyard. And I've had several advisors that have said that recently.
yeah. I mean we're seeing a number of kind of hotbeds. I mean, aerospace slash space systems companies kind of popping up in the kind of Bristol region, I guess, on the back of their general kind of aerospace knowledge, and also that ties well with the compound semiconductor catapult that's in Newport. So you kind of get quite a bit of kind of knowledge transfer in the engineering and experience there. We're seeing a lot of uh, there's a lot of kind of quantum computers coming out of the that kind of northern belt of universities as well, and that kind of experience, and a lot of AI stuff coming out of there as well, which is really quite interesting to see. And I would be reticent to say that obviously just round the corner from our main offices is obviously the life science hub, but we're not here to
Yeah.
talk about the life science guys. So.
No, no, no. We'll do that next month.
Yeah.
Brilliant. Okay. And also, I think it's important to know that maybe this has changed a little bit more, and there's more regional funding, isn't there? You touched on it. That it means that we're not doing all the heavy lifting, and it, it doesn't de-risk it at all, but it just means that there's a better chance of them to maybe to pull through. Certainly so for example, with our SEIS Innovation Fund we've just launched, to pull through from SEIS to EIS,
Yeah.
and we're not doing it on our own. So that's useful.
Yeah, I mean, on a really simple basis, obviously the British Business Bank, which I think is now in the middle of deploying its, I guess, all its separate regional funds.
Yeah,
They've essentially provided funding for investment to go into technologies that sit within whichever region that the fund's operating in, and that certainly gives a remit to help support companies that are already, that are setting up outside of London. Absolutely, and there's plenty of other people who are doing that as well now. So.
so again, as well as life sciences, but particularly in tech, there's lots of opportunities there. And obviously, I think nearly every advisor I've spoken to since the budget has wanted to know more about, you know the way that Rachel from accounts is changing the market and opening up the conversation for good or for bad or whatever. Depends. It's not for everybody, but certainly EIS has got some major
Mhm.
tax benefits. But also there's a great range of companies that they can invest into. They're not investing in one company, they're investing in a portfolio, and you only need one or two of those. They're
Yeah.
obviously going to be failures, as we know. That's part of the game. But are there any companies, or for example, up until the end of the tax year, is there anything you're working on, or there's particular companies that you're excited about, and we can promote to our IFAs around the country?
As in new companies that will be coming onto the onto our
Yeah, I mean,
allocation
I
list.
think you've touched on the mature ones that maybe
Yeah.
they're going to
Well,
do well, but
yeah.
new ones particularly.
I mean at any one time we've got typically about 8 to 10 companies that are currently open, and they tend to range from uh, early stage right through to the stuff that's more mature. I wouldn't say it's the mature companies because
Yeah.
we're still very much in the early stage business, but the risk profiles are set differently. Some of them have got very, I mentioned Actuation Labs, for example, who are developing essentially deep tech, um, grant funded. It will probably be a little while away from generating commercial revenue,
Yeah.
commercial income from it, as opposed to say a Hurricane, who are teetering around the kind of 4 or 5 million of revenue mark, or the same as Headbox. So they present differently with slightly different risks and probably slightly different time scales to exit. So I would have thought so.
Okay, it's interesting. And obviously, we work under the umbrella of the EIS, and the government obviously back that umbrella, if you like, certainly for the next 10 years. Is there anything more though that, because for me, we hear about tax planning and trusts and giving money away and pension planning. Is there anything more do you think the government could do to help us all to make EIS more on the table, if you like?
I mean, I mean, one of the things that probably I'm seeing now that probably wasn't considered when EIS was initially set up was um, EIS can only be invested into ordinary shares. And I think, as I mentioned earlier, we're seeing kind of fruitier structures that are kind of coming
Yeah,
into play. And, I'd very much like to see EIS extended to be able to participate, fairly alongside some of these other structures, whether they're kind of pref shares or, which have got interest associated to them, or, you know, significant liquidation preferences. It would help to broaden the opportunities for investment into different companies. So
good. Okay. Listen, I'm just conscious of time. So before we finish, I just want to just reiterate that Deepridge Capital have two portfolios, life sciences and tech. Tech has been today. We're going to do life science next month, but as you mentioned, there's a number of companies that are open. People are coming back from their holidays. I think it's on the agenda for a lot of IFAs now in various guises, whether it's BR or EIS or what have you. So I think, talking to IFAs, if you have any, I think the consultation periods are coming through and we know what the landscape is going to be up until tax year end. What we would say is that, don't leave it till the end of the tax year to actually do something about it for your clients. Your clients are talking about it. I live in a small village in a little lane. There's 10 people, 10 houses, all retired. And they know I'm working in financial services for the last 8 years with Deepridge Capital. And 4 of them, and this is the first time in 27 years, 4 of them have asked me, what shall I do about Rachel Reeves? And this never happened before. So it is out there. People are worried. And I've just said, well, go and speak to your advisor. But they say we haven't got an advisor, all loaded, but don't have any advice. So just make sure that IFA is talking to your clients. Don't ignore it. It's there. It's going to happen. Don't put it off. We're here to help. We've got a full suite of people around the country and experts that can help with the tax side of things. So, please pick up the phone or drop us an email, and we'd be happy to help you with the situation at the moment.
I mean, just on that point, Phil, it's probably worth just mentioning that the way Deepridge operates, we have the ability to deploy funds immediately,
Yep.
as opposed to waiting until the end of the tax year and deploying as a fund. And obviously that has significant benefits for your clients because their capital gets put to work immediately.
Absolutely, that's the thing. You can have a meaningful conversation with the client about, income tax relief and getting stuff done. And you're investing into some fantastic companies, and also there's no fees to the client. It's all levied on the investee companies. So it's a win-win situation. But yeah, it's all about talking and getting the information. And we're all around the country and here to help. So just want to thank you, David, for your time today. Appreciate you're very busy. So hopefully we'll see you all again when people are back from holiday, and we'll be looking at life sciences next month. So thank you all very much today. There will be a webinar recording that if you missed it today, you can access it, and we can do that contacting your local regional director. So thank you again, David. We'll see you soon, and have a good rest of the summer.
Okay.
Cheers.